Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Today we got 4 topics. We're going to go over the SPAC, DWOC turns into DJT. Then we're going to go over something called skew. It sounds like a really scary word. It's not. It's pretty straightforward. It's just a weird word, skew. We're going to talk about the expected move. We talk about the expected move often, and then we have our trade of the day. I want to go to the screen because this is something I've never done before. I snuck one additional topic in because the market's moving right now and we got to talk about it. So let's talk about fixed income volatility. I have you in front of the PowerPoint and we're going to start right here. And I just added this chart because we are moving. Okay, bonds. We are looking at the 30-year bond is the blue, okay? And then we have the 10-year and the 5-year. What these lines are is volatility. Right now, volatility is going, this is calling it, it's going out. The expected move is increasing right now. That's why I jumped on, because right now bonds are moving. That's what we need to be concerned with. So all week I've been going over key levels. We actually started going over these levels last week. I want to remind you, QQQ, last trade, 439. Big time support, guys. 436 to 433. That's a big band. I wanted to add this extra slide again because bonds, volatility is rising as we speak. The more bonds drop, the higher volatility will rise. Watch that support level. I have a special report that I'm excited to share today. But in order to grab today's special report, I need you to sign up mastersintrading.com/live. If you're already subscribed, no need to subscribe again, but please, this is where we are going to be sending that special report. The special report was sent out February 9th on DWOC. I sent this out because DWOC is a SPAC, but this is something that I have never ever seen in any kind of filings. We are subject to significant regulatory scrutiny by the SEC, further elaborating on ongoing investigation that could result in the imposition of significant penalties. So DWOC, again, this is just insane amount of risk. And the intention of the report is when we see vol spike in these crazy names, be very careful, guys. They're going to be volatile, but in my opinion, inevitably, this name is going to trade zero. So what is DWOC? Well, the original purpose is it's a special purpose entity. So it's a company, it's like a blank check company that starts and it could end up going into any company. It ends up partnering with Trump Media, launch of Truth Social, okay? DWOC changes its symbol to DJT. Really, it's just a marketing play. They're just doing that to associate with Trump, thinking that they're going to be able to increase the value of the stock. Okay, again, just public perception. What can we learn though? Follow options, because in options is the truth. And skew is the price the stock is trading at. So let's say the stock is it's trading at 34.10. The at the money is 35. Okay, let's go 15 strikes under to 20. Okay, so 15 strikes down, 35 to 20. Okay, and let's also go 15 strikes up to 50. Okay, this is skew because here is the bid and the offer. You can buy it for 5. You can sell these calls, right? These are calls for $3.55. But look at the downside. 15 points higher, but if we go 15 points lower, 770, 865. Now, why are these so much more expensive than these? The 7.5s, guys, $1.30 mid-market. The only way to make money on those is you have to go 1.3, right? So that would be, you wouldn't make money on those 7.5 strikes until the stock got to $6.20. The options are pricing DJT to go to absolute zero. You can learn a lot from the options. What else can we learn? People are speculating on these crazy names. DJT closes in its expected move 83% of the time. Okay? This is where the options price movement. This is the expectations of movement. The options are saying, we think it can move this much. Here, it exploded through, right? It closed outside of its expected move. Fine. That's why it's not 100%, it's 83%. Look at here. Rallies above its expected move. No chance for it to hold up this key level, and it sells off. What I'm trying to say is go through the report. When you see this kind of tail risk, when you see a company say, we're under investigation, or with this just unusual language, that's where you get volatility. That's a pretty good call that stock is going down. So please grab that special report. Another expected move, just to show you another example of a name we talked about yesterday. I got comments on Twitter because I don't say MSOS, MSOS. MSOS, expected move. Again, we got right up. These respect the options market. There's a reason why there's support and resistance at these key levels. So make sure you pick up your special report, mastersthandtrading.com/live. Okay, my friends, let's get into the trade of the day. And the trade of the day is going to be in RELY. Now, every single day, 11 o'clock Eastern, we are sharing our trade of the day. We are in earnings season right now. How we trade earnings is the exact same way since I've learned this strategy as when I was a market maker back in 2011, 2012 on the Chicago Board Options Exchange. How we trade earnings. RELY, in its last 4 earnings releases, has moved 7%, 34%, 35%, 25%. Okay? This is a very volatile stock after earnings. Can we agree on that? If RELY likes to move this much after its earnings announcement, today is April 11th. Earnings are about 20 days away. Expiration is the 3rd Friday in May. So we have about 40 days until expiration. Okay, 40 days until expiry. We have 40 days until expiry. How much do you think RELY can move in 40 days? Remember, one of those days is earnings, right? So one of those days, I wouldn't be surprised if that sucker moves 20%, right? I mean, it moves a ton. But the options market right now is pricing in only 17% of movement. And it's pricing in only 17% of movement, but there's still 40 days left. That's weird. That doesn't make sense. If you didn't catch this, go back and watch. TOTD, May, 36 days, not 40 days. Jonathan, come on. RELY last trade, 1948. Now, in order to get the expected move, 3.8, divide that into 1948. Here's what RELY looks like, respecting its expected move. Fine, but you know what? We think that this name is going to outperform its expected move. So the trade that I like, we want to be in the May expiration, $1.85 bid for these 20 strikes. And then I also like 75-cent bid for these 22 halves. So we have 22 and a half calls, and then we have 20 puts, $1.85, and then we got 75 cents for a grand total of $2.60. Now, if you buy one call and one put, you have $2.60 of risk, or $260 per contract. How you could look at this is your short stock from 20, right? And your long stock from 22. What you don't want is you don't want this thing to just get stuck in the mud and not move anywhere. But you know what? We have 36 days. So I like our chances. TOTD is our trade of the day. I snuck in one more topic. Yes, I did, because I got a great question from Marty. Marty, first of all, thank you so much for reaching out and asking your question. I appreciate the kind words. The question was, the other day, I don't know if it was Monday or last Friday, I came on here and I love this name, USFD. And we liked it because we saw some advance notice of a major trade. When we were on, it was 53.50. The stock quickly fell down to 50, but it's since rallied. The trade was a $1.75 bid on these 50 strikes. Marty, I like it. Work a limit order. And I love that you said that you didn't chase. Good. Don't chase. Work a limit order. A $1.75 bid for one or for however many you like to play. Leave it as a limit order. If you get filled, great. If you don't get filled, no harm, no foul. There's nothing wrong with working many orders in the options market. It's a good idea. Leave limit orders. Go out and play golf. Go out and do your errands. If you get filled, great. Those are levels that you want. Make sure you sign up. Grab that special report, mastersthandtrading.com/live. I'm on here every single day, 11 o'clock. We like to say, the creative trader wins. Look at things from a different lens. My name is Jonathan Rose, founder, Masters of Trading. Trade smart. I'll see you live tomorrow.